We will now discuss more in-depth digital assets and markets with Michele Curtoni, led the emerging market strategy at the London Stock Exchange in the early days and has been very active in the blockchain and digital space since then.
I'm Michele Curtoni and I work for a bank called State Street. State Street is not only a bank, so also is kind of a data provider, a custodian bank, an asset manager, as well as a kind of capital markets asset servicing company. So we have like a little the hand in a lot of different pies. I've been there for a couple of years, working in the digital product development team. Prior to that, I was working for the London Stock Exchange Group for nearly 10 years. My last role there was to set up the emerging technologies practice. So what we do now in the blockchain space is a variety of things. So we have a number of engineers who are studying the different platforms. We have a number of projects together with different business units to understand really how our services have to change given the assets are changing. So what I mean is, as assets are becoming a bit more digital, as you know, you've seen cryptocurrencies, but also the tokenization efforts. How do we have to evolve to actually come up with the same services or different services with different assets? What I really mean is fund administration, transfer agency, even trading and custody. All these things are changing because the underlying technology and the asset, the securities are changing.
How challenging was working with at the London Stock Exchange? I guess you had to disrupt a very traditional system, implementing something that obviously was not straightforward, was quite uncertain, was new, was innovative, and you know, how did you move in that space? What was your strategy there?
That's a great question, because indeed it was a very, besides some practices that might have been old, but also as a very regulated business. So the way we kind of set it up was to create a separate group, right, within the technology arm that with a kind of a clear mission and with environment did not touch the production system of the company itself. And what really, I think at the time, the former CEO gave us a great guidance was find me an application of blockchain within a regulated environment. And that's where we started looking at issuance, and we started working with the lawyers and the regulatory affairs people to see issuance of securities, whether that could be a good idea, whether we started looking at post-trade with a CSD and Central Security Depository, whether that could be a good place to apply blockchain. This was 2015, 2016, where you know, things were moving slowly from a financial services perspective. All these things are now reality in one shape or the other. So the good guidance was, even though it was a very risk-averse place, we found innovative people, put them on the side, not to really interject what other people were doing, and follow a regulated activities path. So that kind of worked out fine.
Do you think banks are kind of ready to welcome these new technologies, and what they would have to change in order to be more innovative?
So it's disrupting little by little. So what we started seeing, at least what I started seeing, is a lot of banks are moving to understand and develop different components. So you start in trade finance, then you look at supply chains, then you look at custody. So they're not, even though blockchain as technology could actually revolutionize, as you said, compressing layers, distributing systems, no one is going all the way through because it's kind of nearly impossible. So that's one. So different components is what they're looking at. Yes, they are disrupting themselves. Yes, we are disrupting ourselves. The thing is, what obstacles? Many. So I kind of listed a few, right? The internal risk frameworks we have internally, how we see these new assets, how we see technologies, is very, very different from what these technologies are. Understanding the asset types, having the right tools to integrate with these new technologies. So sometimes you struggle having API connections. Sometimes you struggle with a public cloud or private cloud strategy to interact with things that are very open source, but we are not open source, right? Not kind of fully developed as an open source company. It's a step forward. Politics also take a thing. it's hard to kind of to disrupt and to pass by the politics of an organization and the business lines, because as soon as you start disrupting, the revenue is going down. So you have to show something else, because shareholders at the end of the day, they have the kind of the rights, and the clients have the rights to understand what you're doing with the technology and how it's benefiting not only you but also them. So the business cases are very complicated to do in the blockchain space. So these are kind of a few things that I see being not easy for us.
There is one thing that always wonder me, and would banks still have a custodian role for people monies, or would they become more like an institution that is going to make sure that things are going to be managed, coordinated, and kind of help us, assistant to a new, different financial ecosystem?
I think it's a mix of both, right? So now custody is never fully unbundled as a service. You also add on new things, for example, reporting, cash management, as you're saying. So there are a lot of other things that you can put together. And then really that is what makes the value proposition stronger, because custody is about trust, yes, but also cash management is about trust. Having deposits with the DAs is about trust, and making sure the core productions are taken care of properly across all the chain of the security lifecycle. That's also about trust. So when you start decentralizing the trust with kind of a blockchain type of technology, you start wondering, as you correctly asked, where what's going to stay, what's not going to stay. So I think not many people have an answer. I think custody might change. No one really have a clear understanding of what the new digital custody model is going to look like, because now it's all about hot and cold, but that's going to disappear very soon. It's not efficient enough. We're way more efficient than where we are today. So what's the new digital custody model looking like, and what are the new asset services around it? Because if you think about it, a digital assets will not have to be tracked, because it tracks itself automatically per the nature of the blockchain. Therefore, a lot of different business services are going to decrease. So how can you keep adding value to that new digital assets world? So these are questions that are all up in the out in the open, and everybody who says they have an answer, they're wrong, because we have actually found a proper answer together, also talking to regulators and stuff. So there's still evolving situation.
But also there is the element of security that banks has always been facing, fraud, money laundering, and that's probably the easiest things that blockchain could help with.
Yeah, so if you think of a blockchain system that has that is taking within it has these tokenized assets that have nothing to do with cryptocurrencies, I think KYC and AML rules are going to apply the same way they apply today, because eventually regulation is technology neutral, so you don't really care what technology you're going to apply it to. It can be a database, can be anything else. When you look into these new cryptocurrencies, I think that's something that the regulatory space is evolving, right? So there's new Financial Act for Terrorist Financing rules, FAT5, I think, coming up. AML, there are new rules coming up. Bank of England is kind of releasing new papers kind of every other week. So understanding those risks, it's happening. While for an internal blockchain, in a way, centralized blockchain system with tokenized assets, I think yes, that's a very good use case to apply to AML and KYC.
In your view, who are the banks that are more prone to adopt, really implement blockchain? Who are the more advanced?
It's a good question. So it's a question that I don't know how to answer, because I'm going to talk about my competitors. I say that I'm not going to name names. Smaller banks I've noticed moving quite fast, but which kind of would be kind of a stereotype, because bigger banks are slower, like elephants. But not always have been the case. I've seen cases of developing very good and smart, very focused projects in like stable coins, for example, bank issue stable coins that have gone very far. However, I think it's not only about what banks, but it's about what teams and what people, because what I've seen is the right people leading the right innovation and technologies team do amazing things. And when red tape kind of comes and blocks people working in kind of otherwise amazing banks, nothing happens. And what other thing is, what banks really do things are the ones that collaborate with each other. And we've seen a lot of consortia, and one of them is the Finality utility settlement coin that we're part of, with 20 plus banks. When we get together, when the banks get together on the same table on the peer level, then things happen. When you try to impose things, well, that's too late, because we're talking about distributed systems. So I think consortia and collaboration have been an element definitely to help banks move forward in a real and pragmatic way.
That's very, very, very interesting answer. Now, let's talk a little bit about investment. How crucial for investors to have to diversify with a digital asset portfolio?
So interesting. So client demand. So if you let's qualify the question. So you can have crypto investments or investing in tokenized security. What I mean by tokenized security is securities that exist elsewhere, that sit with a central clearing, with a CSD or with some depository, and they have been tokenized in the same way that depository receipts work, or some securitization kind of efforts have worked in the past. So if you look at the cryptocurrencies, it really kind of what clients have asked for that type of diversification of portfolio, and why. We've seen some interest, but the interest has really gone up and down with the Bitcoin price, sorry. So that kind of really was telling us that when the Bitcoin price was up, a lot of people were coming to ask about it and what services we will provide. And when it would go down, nobody would be there at the table. So the volatility really affected also the interest from the investment and the creation of solutions around it. However, for more of a digitization of the financial services and the financial investment industry, there's a lot of interest started with real estate and assets, and now moving into more of the how to invest in secondary and primary markets for fixed income. I've seen that, and a lot of equities are going to come up. So those digitized onto blockchain systems have been quite interesting, and we've seen a lot of interest there all across the value chain, from buy side onwards, really. Less pension funds. From the crypto side, it's really been too volatile, and I cannot say that it's been so big to motivate all our banks to really jump in there, fully.
Talking about digital assets and also smart contracts, which have upgraded massively the use case of blockchain technology, which businesses could these two disrupt if they are merged together?
Yeah, so a smart contract, as defined in many of these public blockchain like Ethereum, is it's kind of, I like to think of it as the business logic that moves the digital asset itself. So in a way, they are coupled. When they can be decoupled, I've seen companies out there trying to decouple the two. For example, there's a digital asset modeling language that they just think about the modeling language rather than the asset, because the asset will live on a specific blockchain that they not quote unquote care about. So when they are coupled, you can rewrite the entire life cycle of the security. And I don't think the full banking industry have understood the implications of this. A lot of proof of concept and consortium really looking to rebuild this have struggled to fully capture the value because of that network effect that I spoke about earlier, of getting people together. And it's not always easy to get people together. So as soon as you miss a piece, you cannot do it again. But then when you have all the pieces, you're trying to destroy the pieces themselves. So it's been quite paradoxical in its approach, but it's definitely going to happen. I've seen very smart examples of like ISDA with working with smart contracts to recreate derivative structures. And those are incredibly efficient, money savings, and from an infrastructure perspective, probably easy to implement. However, we have a lot of questions, for example, security, automation, and the operating model of it are still unclear, because how much can you automate? How much do you want to automate? So that's kind of the question that is still open.
Yeah, this is actually a great point, because one thing is, as we said, is the proof of concept, and another thing is the real implementation and development of tech application that can actually really benefit businesses. I mean, what are the challenges there? How can you fill this gap?
Yeah, no, great point. So we've seen a lot of PR in the past few years. We've seen a lot of technology proof of concept that they were nothing more than that. We've seen business proof of concepts that from a technology perspective were incredibly solid, because you have to do it as soon as you have to put money, kind of client money on it. You want to have like a very near production environment, near production like environment. However, this mismatch, it's kind of it's eroding a little bit of the conviction that this blockchain can actually work. What I mean by it is, a lot of people have been talking about proof of concept, but no specific blockchain business in the financial industry is up and running and making money, right? So how do you approach it? Well, because probably we don't have a good technology model. Okay, wait. So shall we try new technology proof of concept to exemplify and verify the validity of the business proof of concept? So there's also this struggle between business, sales, and technology that is never ending, and it's been there for a long time. So what I think is very important is let the technology run its course, let it find the right privacy, security, and everything else, and integration of solutions, and let the business work with that, but in a way neither follow or lead, right? And within a regulatory environment, you have these three elements: regulation, business, and technology working together, because one cannot dictate the other what to do. And I think in some examples that we've seen in the past in the market, that was the case, and nothing comes to fruition.
There are a lot of concerns that actually digital assets and blockchain are going to destroy the jobs on Wall Street. They are completely, changing the financial markets. How would you see, let's say, the financial markets in 10 years, 15 years? Yeah,
so I think I don't think it's going to be the case. If anything, it's gonna change many of the jobs that are there today. Finger crossed, the market in 10, 15 years. If I knew in 10, 15 years I'll be a millionaire, but I don't know, so I won't be a millionaire. But I think it's going to be definitely different. So way more quote unquote democratized, so decentralized. So you won't need so many rent-seeking elements in there to kind of extract a business. If anything, it will be a lot of network-based, like a platform and Spotify. And today, the way we have our retail industry, you listen to music, you don't have to download it from a server. You have an app where you can actually share playlists with other people. Well, maybe in 15 years, you don't have to find an issuer on a specific platform, but you have a network of platforms where you can issue and tailor your issuance according to whatever liquidity pool you have. Today, this is very not transparent because you have to go through book running and banks to find out. Tomorrow, that might be like an app, right? So I think we're moving towards that element.
Yes. So do you think we won't have brokers anymore, for example?
No, I think you always need a price element, right? So you always have the brokers. What you're going to see less of is that record keeping banks, sorry, not banks, but institutions, because that's going to be distributed across many, hopefully on this kind of blockchain example. So you will have time stamping. You don't need to pay $10 to find out where your stock was at whatever point, who investor had it. It's public. You can find it on Google. Sorry, you can find it on the blockchain explorer by inserting the hash graph, the hash of that specific transaction.
Okay, so more transparency, a better service, but still will need to be. Let's say we will still need to have some pinpoint that are present in the traditional system today, just to guarantee that.
Probably, yes.
Right. So the last things that I would like to talk, and I hope that you would like to share your views, is one of the most controversial topics at the moment, which is Facebook. I mean, we saw what Bank of England replied today. Facebook new digital currency, which obviously has the potential to systematically disrupt the payment system, but there are so many concerns about, regulation, standard of resilience. What's your view on Libra? And do you think it's actually going to be positive, disruptive for people, and also this resistance from policymaker and regulation?
Sure. I hope to have a little bit of a controversial view because I heard so many bad things about Libra that not many were saying good things. So as soon as it got out, I got very, very excited. Forget about Facebook, forget about PayPal and the other companies that were in that Libra association, that some of them actually left now. It was all about, okay, this is super interesting because this is the creation of a proper network, and that I'm an economist at heart, so it's the creation of private money. So a private money on a technology that thrives on distributed networks and the network and a platform effect. So I was like, wow, this can actually change the way we do businesses. From a banking perspective, obviously it's a risk, even though we don't create money, right? We don't create money, so we actually could see it as an opportunity to jump in and to potentially even provide services or potentially use Libra if actually makes sense. But I think the way it got announced, the way it was put under scrutiny was very unfortunate, because it might have not been very ready. It's kind of presenting a PhD dissertation just after 1 year. You're on the right track, but you're not ready. And a lot of the regulatory concerns were kind of not discussed in the beginning from a Libra association, probably because of the nature of the people they employ. This is kind of a West Coast approach. And here, look, we're in London, Zurich, Frankfurt, New York. It's different type of people that you're gonna face yourself with. So a little bit more financial focus and the banking services and what a regulation actually means for payment services is it would have been ideal. And you mentioned, Stefania, the Bank of England paper this morning saying, this afternoon, talking about what a systemically important system Libra could be. And if you think about it, systemically important systems today are banks, are clearinghouses, are stock exchanges. But Libra has to go from what it is now to that level. That's a multi-year journey. But I think that the concept is fascinating. And if it's not, my view is, if it's not them, it's going to be somebody else doing something similar.
And also, I mean, we will have to mention Facebook anyway, because they measure big point is the outreach they've got, the kind of financial, no, let's say not financial, here I'm jumping too much, the level of inclusion, social inclusion they are bringing in the platform that can be transmutated into financial inclusion in a way, and more like seamless payments. So definitely, I mean, the potential is great. It's great internationally. But what about data? I mean, we know.
Yeah, so yeah, that's the point that during the not investigation, during the discussions they had with the Senate in the US, many people banged on about, right? So how are you gonna make sure, if you're gonna offer, if you Facebook as part of the Libra Association, because they are the biggest pusher, but they're part of the association of 20 plus companies. If you're gonna issue your Calibra wallet, which is gonna be the interface with which retailers and non-retailers will buy and sell and hold this Libra coin, are gonna implement it on my WhatsApp or on my Facebook Messenger, how can you make sure that data is actually properly partitioned? And the answer that Libra, or Facebook in this case, David Marcus, was giving is, we'll make sure it is partitioned because privacy is very important. Well, okay, Cambridge Analytica was 2 years ago or 3 years ago, so that didn't really go down well. So how are you actually going to do it? And I know it was very rhetorical in a way, because the answer, everybody knew the answer wasn't there, but that's something that Facebook and the Libra Association really have to work very hard on. And I think that's something that banks and other financial institutions and even retailers, personally me, if one day I had to interact with Libra, will be very careful about, because as soon as you start changing my behavioral data, your activity on Facebook and Instagram or everywhere else, with your financial data and your financial behavior, well, it's a kind of a superpower, right? And I don't want to give that superpower much. So that's why I hope there's a lot of companies, small companies, that starting now about monetizing your privacy. So can I say yes and no to a website that asks me for the cookies, but can they actually pay me for me to do so? So there's a lot of new business models that I think Libra will come up, because privacy and data, as you said correctly, Stefania, is the new is a great new asset class, and our digital identity now is everywhere on the web, and that's really changing the way we're going to do business and the way we are, because we are not only our person, but we are what you see on the screen, unfortunately, because that's our traces on the web. So Libra will change not only if it happens, not only the financial services, but a lot also our interactions between ourselves and on the money, how we interact with financial instruments.
Okay, and obviously it's an ambitious project, it's going to happen. And the thing is, I get your point on consortium, and probably what Libra needs kind of like a strong partner, somebody that is going to work together and is going to kind of push this project to actually happen. Where do you think this help is going to come from? It's going to come from banks? It's going to come from government? I don't know. Who is going to help Libra? Because I think they do need help to actually realize the project they have got. There are too many concerns at the moment. There's too many people, wondering what can go wrong. I think they need somebody to hold in their hands. This is all I think. What's your views on that?
It's a very acute observation. I think it will be a mix of all. So definitely they have to do and exactly this is what they're doing now. A lot of work with regulators. Right, so they're understanding the different regulators and the different implications that different regulators apply to their jurisdictions, and I think that's the homework that these guys, I believe, are doing. I don't know specifically what they're doing, but I think that's kind of an area of focus now. And I think if they want to launch from a global perspective, an international perspective, they will have to deal with existing financial institutions, but it doesn't necessarily have to be banks, right? So you have kind of a lot of different institutions that can provide that regulatory support, and one could be banks, other could be clearing houses, it could be central depositories, or a transfer agency, like you name it, but it could be like a network of companies. And I think Libra in their white papers also describe this, because they will need geographically distributed banks to hold the assets. They will need, obviously, like a little bit of a standardized regulatory approach, because if you start putting Libra from an Indian investor to Australian investor into the US, you have to link those three regulatory frameworks together, and that's kind of one of the biggest challenge. And then the technology partner. So how can you access Libra? You don't want to access Libra only on Facebook. That becomes a monopoly. So you want to have access via PayPal. But what if I don't have PayPal and I only have a Bitcoin wallet? Can you access from it? And maybe yes. There's going to be a lot of new technology implementations coming in on the back of it. So it's going to be a big mix-up of everything. If it happens, right? Again, we don't know. Finger crossed, because I'm excited to see something change in the money situation.
I think we are all excited to see how things are going actually to happen. Thank you very much, Michele. Thank you so much for joining us today.